I'm Tammy Love. I work with LeAnn Riley.
Hi guys, I got a bad sore throat.
So I'm her voice tonight. And we help busy people build real estate investing income without being stuck or fearful by mastering the proven step-by-step system to get cash flow deals. We are real estate expert who help clients buy, sell, and invest, and we are a part of an Encore investment team of realtors in the Twin Cities area, Minnesota. Now I'm speaking for LeAnn. She built a multi-million-dollar portfolio of properties, including residential, multifamily, condo developments, commercial, and vacation properties across several states. As a national coach, she taught her proven profit formulas across the U.S. She helped others get started as investors, and worked with a chosen strategy of locations to acquire properties. Tonight, we're glad to have LeAnn and Keith and myself here. A few logistics that I'll introduce our expert speaker. Hit the chat button. So
go ahead and put your name in the chat box. I just want to see who's here today. You can type that in.
Okay.
And that's where you'll put your questions, is in the chat box.
She'll monitor that, and then we'll ask them for you, to Keith. Just try and hold your answers for a little bit, or questions, till we get started here. And I'm going to introduce our guest tonight, which is Keith Liss. Keith Liss is with Caliber Homes. Before we start, we're going to want to do a poll of who's listening. Simply answer a question as to which strategy you are using to invest in real estate. So LeAnn's putting that up right now.
Give them some time.
Yep, we'll give you a little bit of time to finish that. Yep. While you're doing that, I'll just kind of give you a little bio.
Hang on.
Okay.
Hang on, barely. Go ahead and fill it out. Say all.
Okay, you guys go ahead. Oh, good. Wow. A few just starting. Some fix and flips, good. Some wholesaling. And buy and holds, great. Love buy and holds. Multifamily and single family, good. So primarily just starting. Got about 55% on that. Got a realtor in here too. Hi. We got a BRRRR. What's BRRRR?
What's BRRRR? We had a seminar on that. That's the buy, renovate. Good gosh, help me. Buy, renovate.
When your voice goes, sometimes you forget things. That's what happens.
Refinance. And then rinse and repeat.
Ah, got it.
Okay.
We're all done. Good job.
Yep, good job.
So half of you guys are just getting started. Okay. So
Wait, I'm sharing the results just so they can see them.
Okay. So I'm gonna give a little bio on Keith. Keith has been
Wait, I gotta stop this poll.
1 second.
I'm stopping the poll.
I appreciate your patience, everybody. I'm new at this. Okay.
All right. Can you see Tammy and Keith? Somebody put that in the chat. Go ahead.
Okay. Keith Liss is a mortgage professional, has been in the business for 22 years. His career includes mortgage. He's been a VP at Wells Fargo, then insurance, and then he gravitated back to mortgages. Today, Keith works at Caliber Homes, is a national company that can lend in all 50 states. His specialty is first-time home buyers, but he can do everything. Actually, he can. Worked with him several times. He's pretty remarkable that way. He's very, and I would agree, he's very remarkably, he has this remarkable amount of tenacity. So he gets stuff done. He's closed 99% of 7,000 loans that he originated. That's pretty remarkable. Keith is great with investors. He just closed 2 of LeAnn's clients the last few weeks that are investors. Okay, so LeAnn met Keith when he was an insurance agent. Why don't you tell that story, Keith? I thought
Yeah,
you.
I was looking. Hello, everybody. I was looking for opportunities that were not as expensive as BNI to network. So I joined a group called Meetup, and we kept meeting at different restaurants in the northern suburbs. And LeAnn happened to attend one of those meetings, and I was an insurance agent who was actually very knowledgeable about mortgage. So LeAnn and I just started talking about insurance and mortgage and started a relationship. I think that was in about 15, 16 years ago.
Wow.
And all of a sudden, a few years ago, LeAnn said that she wanted me to start doing some work with her. So we met and started working with her clients, herself, her kids, her friends and relatives, and the relationship has grown from there. Now I think we're a pretty successful team. So
Yes, I would agree with you completely. I've done a few deals with you, mister. It's been really great. Okay,
yes, we have
so let's start up some questions. How long have you been in the mortgage lender?
22 years.
22 years. Okay.
I know I look way too young to be in anything 20. No,
You do. You do.
yeah, right.
So you've kind of been through the whole mortgage and insurance, so you kind of understand the whole aspect of how it all goes together.
Yes, and I think that's very important because a lot of people end up losing deals over simple little things like not understanding insurance and what kind of insurance you have to carry and what deductibles are. And I've seen just in the last couple of weeks, a couple of my peers lose several deals because of the cost of homeowners insurance.
Wow.
The other thing a lot of people skip over is not realizing that you need to figure in taxes and insurance into payments. So they look at the principal and the interest and qualify somebody on that. You have to qualify people based on the total payment, which is principal, interest, taxes, and insurance. And where applicable, you have to have mortgage insurance if you're buying a primary residence and not putting 20% down. So you only have to make that mistake once, I thought, but I've seen people make it dozens of times a month. They just don't like doing it because it's too much work. So
Right. So you kind of get it all figured out to make sure it's
figure it
affordable
out
and
up front.
that
Yep.
ultimately it would close. Yeah. Great. So I know you've recently switched companies, and I thought mortgage companies are all the same. So explain the difference of why you like Caliber so much.
I like Caliber because of the flexibility of the products and programs. All mortgage companies aren't alike. Working for a big bank like a Wells Fargo, a US bank is totally different than working for an organization like Caliber. Caliber literally can write their own programs and they can do loans that banks will not do. That's our Caliber portfolio lending, where we basically can make a lot of exceptions to get people into the houses they want to get into. I also like the fact that I have an underwriter team that I work with. There's 3 ladies that I work with that are underwriters, and I can talk to them pretty much 12 hours a day and walk through loans. If there's issues, we fix them before they become problems. With a lot of places I've worked, you don't find out what the issues are until they deny the loan. My company is driven to close loans, so we try to make sure that we see what we think could be a potential impediment to that, and then we direct it and fix it.
Well, you kind of said that with Wells Fargo and Caliber. I mean, I would assume that, like you said, Wells Fargo has more. There's more there. Yeah,
There's a
more.
lot limitations.
Yeah.
Wells Fargo has a lot of limitations. They also have something that is with Fannie Mae and Freddie Mac, which are the primary agencies that are backing home mortgages. They have their standards and guidelines. Any lender can look at those guidelines and then put on what they call overlays. Overlays are when a lender, like a bank, decides, well, that's not strict enough, so we're going to make it harder to get that loan. Why they do it, I don't know, because Fannie and Freddie are backing the loan anyway. But Caliber has no overlays. Whatever Fannie and Freddie say a loan is good and here's what you have to do to get it closed, we follow that to the T. I'm not even going to name the institution, but I almost worked for a large institution one time and asked them if they had any overlays. And they said, yes, we have a few. And I said, well, send it to me so I can take a look at it. It was 78 pages long. Every single loan had overlays against credit scores, debt ratios, types of properties, locations. It was unbelievable. And they also said that their closing ratio, their goal was to close 65% of the mortgage they originated. So a 35% decline rate, which I could not tolerate.
Right. I want to say I did have an experience with you. You and I worked on a client, Michael. We won't say his last name, obviously, but he was real loyal to his bank. He said he banked at this bank since he was a kid. Won't name the bank. And then that lender, that's how we got him as a lead. So we were talking to him, and the bank let that lender, that person, the mortgage person he was talking to, go. And then they switched to a call center. Do you remember that?
Yes, I do.
Yes, and then when we were writing on a house and we needed to get the bid in and we needed the letter. This was a Thursday, and I think we were talking to that other lender, and he said, "Well, I can't do anything. I can't write anything on a letter till Tuesday." Well, they had a all deals in by 9 o'clock that evening. Remember that? And I
Yep.
think you were at a baseball game, I believe, and I said, "I need you." And you jumped out. Well, you got done with the baseball game, but you had me the letter, and I got that in. And guess what? We got the house.
Yep.
Remember that? Yep. He was really happy.
7 days a week, 20 hours a
That's
day.
right. You're always available. I do say that with my people when it comes to my clients, is that you need to have access to your mortgage person so that you can ask these questions and we can get stuff rolling, because it's not a 9 to 5er. You know.
No, and I don't think there's anything worse than if you're a borrower, first time or seasoned borrower, and you can't reach your lender except 9 to 5, Monday through Friday. People spend all weekend worrying about things that if all they do, and I'm technology savvy now, so I get a lot of texts in the middle of the night from people who can't fall asleep. Well, they're supposed to sleep. I'll be the one not to sleep. All they have to do is ask me the question, and I'll answer it right away. So.
Right. Right. So kind of some other questions. We said that there's some new, we just read an article today about the 2020 home loan limit increases.
Yep.
And how does that benefit the clients nowadays?
Well, the conforming loan limit January 1st went to $510,400. That's an increase. Last year it was at $484,350. That makes 7 years in a row that they keep raising the limit. Obviously, the price of homes is going up nationally. That benefits someone because when you would go above, in this example, 510,400, that's called a jumbo loan, and it has different underwriting, different interest rates, different terms. So going to this higher rate means more people will be able to take advantage of the super low interest rates that are out there today and won't be stuck with a jumbo or a non-conforming loan.
Got it. Great. And it started, you said January 1st, right?
Yeah, as soon as they announced it, which was on, I believe, November 26th, my company Caliber started underwriting to the new guidelines. So.
Got it. Have you had a few of those come through yourself?
Absolutely. Yep.
Got it. Okay, good. Good. So how was the product for you? How did it feel as you're doing it? I mean, obviously something new to your system.
Well, it's not real. All it did is it meant that people could buy more house and take advantage of conforming interest rates. So
Got it.
it doesn't change the process at all. It just opens people up to more homes. I also wanted to mention something that just came out today, that as of right now, inventory in the United States of homes is at a record low. It's never been lower. And that coincides with interest rates right now are at a 5-year low. So interest rates are low. There's people out looking for houses. There's no inventory. In property value side, a $200,000 home in the United States, there was 20% less homes available in January of 20 than there was in 19. And then if you look at 200,000 to 750,000, there was 12% less than there was in January of 2019. Wow. So there's less houses out there. So understanding this process and finding somebody who can walk you through it is very important, because it is very competitive. I have a young man that went out and looked at 10 houses over the weekend and made offers on all 10 and got outbid on all 10.
Well, I'm just going to say, I haven't lost in multiples. Send him my way.
Okay.
I'm just
well,
kidding.
Unfortunately, he has a relative who's a real estate
I know.
agent.
I'm just being funny.
No. And that the biggest thing is that sometimes people choose unwisely. There is an escalator clause, as you know, you can put in there. You'll beat whoever the top bid is. But he was in a price range, $225,000. It's very, very competitive.
Yep.
They kept going out and writing offers. The first 3 he wrote, he had gotten advice from another relative, never offer full price, always
What?
offer less. Yes, and in this market, that's suicide. He had
Yep.
3 people that called him back, and basically, in a nutshell, they said, ha ha, you're not serious, don't bother us. They didn't even look at the offers when they came in less.
Yeah.
So
Yeah.
it is important to have a good representation on the real estate side with a good
Yeah.
real estate agent.
I do find though with clients, and I'm sure you do too, that you get a lot of people, it's like a lot of the chefs in the stew. A lot of people are helping. You got to try and weed through that. It's a challenge,
Yep.
but yeah, yep, I get that. I understand that you have a new product for renovation, and it sounds like it's pretty exciting, and there's lots of investors here on the webinar. So tell us how this new product for renovation works.
Okay, so the basic premise is with the renovation loan, if you're buying a house, you typically would have to get 2 loans, one to buy the house, one to do the renovation. Or there's some other expensive alternatives like taking out home equity loans or using credit cards, etc. With our renovation loan, you basically get 1 loan. You have someone, a general contractor, write up a bid, what it's going to cost to do the repairs. We roll the renovation loan into your mortgage, and then your mortgage pays off the renovation loan and the regular mortgage at the same time. There is a cost savings there, obviously, and a lot of people that use credit cards nowadays to buy homes and do renovations, you're paying 20 to 25% interest, and it doesn't really make a lot of sense if you're an investor to take money out of your existing home to go and renovate another home. It makes more sense to have the financing tied to the home you're buying, not to a home you already own.
Got it.
And we've done about 15 of them since we rolled the product out. They don't take any longer to close. We also have some affiliations with some big hardware stores that you can actually go into a hardware store. Like we'll use Lowe's as an example, because Lowe's and Menards, Home Depot, they all have books of contractors or people that they work for. You can let those people do the work. You can't do the work yourself, but you can go in and use their self-contractors as long as they're licensed and insured. We do ask to know who they are. We do make a few phone calls for you to back up their credentials and make sure they're going to do good work.
So is the money released? So that's my question again then is, so
as
is the
the
money
work is done,
as work's done? So you have to submit the bills and
it's done as draws. Yep.
Got it. Okay. Well, that's good. Now,
Well,
is this
otherwise you could release all the money and have contractors skip town with all the money. So it's released as the work is done.
Perfect. Perfect. So now, let's talk about this. Can a flipper use this as a product to purchase homes?
I would say it probably isn't going to be to a flipper's advantage to use this. It's primarily for people that are buying their primary residence. It can be used to buy an investment property as long as the investment property is a single family home. It can't be used for anything besides single family home purchases.
Okay. Got it. Got it. So basically you're saying owner occupied remodeling.
Correct.
Got it. Okay. Got it. And the times that you've used this, have you been on the deals that you've closed? Yep. Okay. So give us an idea of one that you had come through.
Just someone who bought a house. We used an FHA loan. They put 3.5% down, and we got them $15,000 to do upgrades in the kitchen and the bathroom.
Nice.
And the work started immediately as they took possession. The one thing they do ask is that the work be done in 6 to 7 months. And as the folks that did this FHA loan said, well, we kind of need the kitchen and the bathroom. So is it okay if we do it faster? Yes, it's okay if we do it faster.
That's a great question.
You do not have to pay the renovation loan back because it's already figured into the mortgage. The time frame is just so that you're not dragging out getting those things done. What's happened with a lot of people when they buy a home and they know it needs new carpet or it needs a new kitchen, it needs a new bathroom, but they delay doing it. And there are people that have lived in their home for 15 years and never have done the things that they wanted to do the day they bought it. This loan allows you to get those things done.
And it sounds like there's not a double close on it, right? I mean,
there is no double close. It all happens at one time.
My phone, go hit it. Sorry about that. My phone in the background. Okay, that's even better because boy, you're saving some money there too.
And yes, it says yes, we can do refi with renovations. Yes.
Oh, okay.
Somebody,
that's cool.
a question just
got it.
up, so yes.
Okay. Maybe is there some questions that we want to?
Yeah. Is there any questions? Okay. I'm kind of thinking of a question. So if I got that $15,000 and I'm doing my kitchen and bath, and I can't really move in yet because I got them tore up, right?
Yep.
So I want to hurry up and get it done in a month. Do I have to come up with the money first to buy the $5,000 cabinets and then, turn in the receipt and then you'll pay me back?
Well, I guess I haven't had that happen. Generally, when you're working with contractors, they get the materials up front, they bring them in there, and as soon as they start to work, they're going to get their first draw against it.
Oh, okay. Because a lot of times, I'm doing a rehab at my son's house right now, or he is.
Yep.
Like he has to put half down. Like on the cabinets, we just charged him at Home Depot on a interest free and we'll get the check. But
Yep.
like the granite countertops, we have to give the guy half down. So we have to have that out of our pocket.
Well, like I said, the ones that we've done so far, the money that the people have needed has been taken care of by the general
Okay,
contractor,
perfect.
and then he turns in the draw and gets paid right away as soon as he shows he started the work.
Because he's the general rather than you're doing subs. Got it.
Correct.
Yeah, I'm doing subs. My son is the general.
This is not a self-help program. You're generally supposed to have a general contractor and then he can sub out to people. In the case of when you use those, I'm trying to look here, it's called direct installed companies, which is Lowe's, Home Depot, Menards, where they have a list of contractors. You have to use somebody like that. This is not really for you to do it yourself.
Okay.
Okay, did we answer that question about what about a refi with renovations?
Yep, we can do cash out refis with the renovation loan.
Got it. Great.
What's a percentage on that cash out?
The interest rate?
No, I'm thinking more, what percentage loan to value?
We're not really looking at it as loan to value. We're looking at it, so I'll just run through real quick. It'll range anywhere, well, the minimum is 5,000 and it goes all the way up to no limit. On an FHA 203K, which is the traditional, will go up to $35,000 maximum, and a VA loan has a $25,000 cap. Other than that, on conventional loans, there really is no limit. It's the scope of the work that sets the limit, but we will not do less than $5,000.
So technically you could buy a house in a nice suburb, put a $50,000 big remodel in there, and it could work for this if the value is going to be 70 more.
Absolutely, and that is what most people have found, is that we go by what the post renovation value will be. So if somebody puts $100,000 into a $200,000 house, they have $50,000 equity because we're going to know up front that those renovations are going to make that house worth $350,000.
I love this idea. You guys, Keith got me talking. This is LeAnn with the bad voice. That's
Yep.
why we got Tammy on here. But darn, this is a good product for us realtors to let the people know about. I mean, especially on a refi, if you can get your rehab done. Wow.
It's a good one. Yeah, for sure.
Yep.
Yeah. So, well, and as we're talking with inventory being, the climate inventory being low right now, so sure gives the buyers the option. Now there's a bigger pool to choose from, and you'll see there's a lot of homes that you walk in and that these people have lived there 20 years and haven't done the work, but that community, that area really has a bigger price point in there. So I agree. This is a great program for somebody to walk in and really see the value of a house that you can add some touches to and bring it back up to the quality of the neighborhood. So
There was an article in the paper over the weekend too. I know a lot of not first time home buyers, but any home buyer, they want to live in some of the more, their desirable areas. Let's just say Woodbury, for example. But some of the fastest growing areas for home purchases right now are Brooklyn Park, Brooklyn Center, Coon Rapids, and Anoka. And a lot of that has to do with the people that are in those homes have been in them for 30 or 40 years. They're getting ready to retire. Nothing wrong with the home or the neighborhoods, but they need a lot of updating and tender loving care. But there's houses for sale. So this renovation product helps a lot because somebody can go in there and get a pretty good deal and then update the house so it's into the 21st century, let's say,
Right.
versus the 19th century in some cases. So,
Right. Houses in a decent price point. Yeah.
yep,
For those
yep.
first time home buyers. Yep. Yep. Perfect. Got it. Okay. So when you are working with people and you're when you know someone isn't ready to buy, then what do you have they need to work on something? What do you guide your people? So we send somebody to you. I've got a couple clients where you and I are working on, you know.
Yep.
So we send somebody to you. What do you first meet with them and talk to them about? What's their goals, right?
Well, yeah, obviously the first thing we usually do is we have a phone conversation talking about what their goals and objectives are. A lot of people say they're not ready.
Mm-hmm.
And one of the things I will always encourage people to is to give me a full application, let me pull their credit, let me see what the issues are or what needs to be worked on. I just had a young lady that we started back in November. As a matter of fact, you were her real estate agent. She didn't think she was ready. She was more than ready to buy a house. She just didn't realize it. But we started this process in November. It gave her November and December to clean up some debt that she wanted to get rid of just so she didn't have it.
Right.
It's better to do that stuff before you start looking rather than go out and start looking for a house and say, okay, Keith, I know we talked 3 months ago, pull my credit, and then find out all the things that are issues.
Right.
Sometimes there are no issues, but it's better to know up front what needs to be taken care of. One of the products that I like that we have at Caliber is called Rapid Rescore. And what I can do is if someone does have dents, dings, and bruises on their credit report, we have something that we can go in, we put in what those items are, and then we do what's called a scenario builder and say, if they do this, what will happen to their score? Unlike some of the credit repair agencies and stuff, if someone has a credit card that is got a $5,000 limit and they're at 5,000, I can literally tell them how much they have to pay it down to get their credit score to go up. And if they do what I tell them to do and they provide me proof, their credit score will go up in 48 hours.
Wow.
There's no charge to them for that. And I've got somebody that I've been working with for months that has been working through a credit restoration company, paying hundreds of dollars and not doing anything to help them. Yet it's going on over 12 months of paying this credit restoration company and nothing is happening. And if we would have done what I said a year ago, he'd be in a house right now.
I had a daughter that did that.
Yep.
Yeah. And you put her in a house, but yeah, you're right. They need that advice of how to get from point A to point B, and you're the guy to do that because that's where the money is.
But the biggest, most important thing is, again, meet with the people, find out what it is they're looking for, and then see if we have issues to resolve. If we don't have issues to resolve, then they're good to go when they're ready. So
I think we have a question.
Okay.
How do you qualify for a home loan if you're retired? No earned income, no debt, great credit score.
Do they have, I'm sorry, do they have retirement income, 401k income?
I'm not sure.
Social Security?
Yeah, social, wait, they're answering.
Yes and yes.
Oh.
So they have both.
When you're retired, and by the way, congratulations, I probably won't be retired for another 100 years, but
Me either.
we can use anything you have for income. So if you have Social Security, you have a 401k that you're taking distributions from, any income sources you have count. If you have great credit and you have no debt, you probably aren't going to need a whole lot of that income to qualify. But again, and with Social Security income, a lot of people don't realize this, we actually can bump that up 20% out of what you're making because it's non-taxable income. So we actually,
sure.
Yep. If you're getting 1,000 a month, you get credit for 1,200. So.
Okay, great. Okay, good to know. Good to know.
But, if they don't have 401k or Social Security and they just have a bunch of assets, does that work?
Yes.
So I have a client that's got she has a life insurance policy that's sitting at State Farm right now.
Mm-hmm. And
it's about $280,000. And she has income, and then she has a property that she's going to sell. So essentially, I should send her over to you and see what she could qualify for if she wanted to.
Yes, and it's hard to make blanket statements about people's income, but there is a way, and I just did this with someone else. that they had a significant amount of money that they moved into a trust. And the trust, their financial advisor basically showed the amount of money in the trust, how much they were going to get on a distribution per month. That was the money we used to qualify them for their house payment.
Oh,
Was
great.
a monthly distribution and a trust that they set up with money they already had.
Perfect.
If you
Great.
just used a 401k and you weren't taking distributions, for example, that's rather difficult to prove. It proves you have a lot of money, but we set it up as a trust. I think it cost $1,200 to set up the trust. And then as soon as the loan was closed, the trust was shut down, the money was moved back into an income-bearing account.
Got it. Okay, got it. So it was used for that vehicle, just to be
It
able to
was
distribute
used
it.
a way to prove
Yep.
that they had the income and that the income that they would get would last. And with that type of income, they want to see that you have enough in that asset to make 3 years worth of house payments.
Okay.
And it was over $1 million on a $300,000 house. It was more than adequate. They could have paid on it for 50 years if they wanted to. So
Got it. Okay. Okay. So I know that you work with down payment assistance programs as well. How do those
yep.
work?
Well, the main one that we use here is Minnesota Housing. Minnesota Housing, a lot of people, when they see down payment assistance programs, they think they're for people with bad credit, don't make a lot of money, and they're destitute. It's just the opposite. You have to have a good credit score. Generally, a 640 is the starting point. You have to have a good job. You have to make good income. And if you qualify on those three things, then the state of Minnesota will give you anywhere from $1,000 to $15,000 to use as down payment assistance. The person that's making the purchase has to have at least $1,000 of their own money into the transaction. That's generally the earnest money that is used for when you put in a purchase agreement. Once that $1,000 criteria has been met, then what we do is we figure out how much money they need for the down payment assistance. If they borrow $8,000, it's not borrow, it's a bond, it's a grant. If they take out $8,000 or less, there is no monthly repayment. If they take $8,001, then there is a monthly repayment. And I just did some quick calculations while we were waiting. At $8,001 a month, if they use that bond money, it would cost them $36 a month for 10 years to pay the money back.
Okay, got it.
Do other states have those programs, Keith? There's people on this call from all over the U.S.
I think most states have them. Minnesota is known as having one of the most aggressive ones. And it's like any other government program. This is allocated by the legislature. So there comes a time towards the end of summer, the beginning of fall, where a lot of these monies will disappear until the legislature meets again. We've been blessed in the state of Minnesota. The last few governors have wanted to keep this going because it's helped a lot of people get into homes. So in the last 5 years, I think Minnesota Housing has run out of money once.
Okay, got it. Okay. So what advice would you give someone starting out?
But what advice would I give somebody starting out?
Yeah.
Well, first of all, have a real estate agent who refers them to me. And then we need to meet and sit down and see exactly what it is that they're trying to accomplish. What are the funds they have of their own for a down payment? What type of loan that they're qualified for? There are a lot of different types of loans. There's FHA, the Federal Housing Administration, which is still one of the more popular ways of buying a home because it allows the buyer to have higher debt ratios, and it's very forgiving on credit if there's issues on the credit. If they can qualify for conforming, that's a good way to go. Conforming loans are as little as 3% down. They have mortgage insurance that will fall off once the person has 21% equity, and the interest rates are fantastic right now. But there's also VA loans. There's a radio commercial that keeps playing that still baffles me, but only 9% of the vets in the country realize that they have VA benefits that would allow them to buy homes.
Wow.
A VA loan is 100% financing. So service to the country, again, very, very forgiving of issues on a credit report, the VA is. and their debt ratio limits are based on whatever the VA feels comfortable with. They have their own underwriting system, but they will borrow up to 100%, and there's never mortgage insurance on a VA loan.
And isn't in some communities too that there's some tax, property tax advantages as well?
If they have disabilities, there is a possibility if they're 90%, I believe it's 90% disabled or more, the property taxes are waived.
Yeah.
If it's less than 90%, then it's a percentage of the property taxes
I
are
think
waived.
that's what I knew about.
Yep, and the last loan program that's out there is USDA. It's not a loan for buying farms. United States Department of Agriculture has certain areas in every metro, outside of each metro area, that they're trying to help grow and expand those communities. That too is 100% financing. It does not have mortgage insurance, but it has what's called a funding fee, and it's less expensive than mortgage insurance, but they'll borrow up to 100% to get people into houses in those areas. I live in Anoka County. 20 miles north of me is Isanti County. The city of Cambridge is probably the city that people recognize most. All of Isanti County is USDA. Large portions of Sherburne County are USDA. I'm not real familiar with the southern counties because it does go a lot farther south. And in this instance, you can be within 25 to 30 minutes of downtown Minneapolis and qualify for a USDA loan.
Okay.
Does a lake cabin count for USDA?
Only if it's a primary residence.
Can a VA loan person buy a duplex or investment property with that, or no?
Possibly. They have changed that where it is possible to use that VA benefit, but I would have to talk to the person that would like to know more about that to get more specific information from them.
So when you
It's
say that,
not common. It's not, a VA loan is basically meant for a primary residence.
well, could it be like a duplex and they live on one side and then they
Yes.
rent out the other? Okay.
Yes, and that is also, FHA is the same way.
Right.
That FHA, someone can buy a duplex, live in one side, rent the other side, so they're a property owner and a homeowner at the same time.
Right. Right. And they have to live there how long before they?
There is no written rule.
But there is kind of
I would
like
feel
a
comfortable
year.
saying a year to 2 years would be the best way to do it, because if you went in and did an FHA, and by the way, you can only get one FHA loan at a time, so you couldn't go out and buy a duplex, live in it for a year, move on, buy another duplex with FHA is a one loan deal. You can keep getting the one loan over and over, but you can never have more than one FHA loan at a time.
Got it. So you'd have to go conventional on the other ones.
You would go conventional after that. Yes.
Got it. Got it. So you really save. So the benefit of doing FHA is the low down payment, because again, you're not 25%, you're owner occupied. So it's
3.5%. So
Right.
you could get into the investment game by owning owning the duplex, living in one part and renting out the other, and you could get away with 3.5% down.
All the way up to a fourplex, right?
Yes, but when you go above a duplex, because I just went through this too, anything above a duplex is harder. Not impossible, but it requires more paperwork and more documentation in terms of the rents and things like that. So a duplex is fairly easy to do. A fourplex we can do. It just requires more documentation. And I tell people that up front, I try not to have surprises. So I'm going to tell you the loan we're doing is doable, but it's going to take a lot of documentation, and we start that after our first meeting. So,
You know, what they're talking about, folks, is house hacking.
Yep. So if we did a house hacking and we moved into the duplex, lived there for 2 years, decide that we want to do it again, and we go buy another place. Now, again, the first one's FHA. So we know we only had 3.5% down.
Yep.
But the second one, what's that going to cost us to get into that one? We're going to be owner occupied again, but we have to go conventional. So what are we looking at for that second one?
well, if you're doing it as conventional, you can put down anywhere from 3% to 25%. It all depends on how that is going to be viewed. If you're buying it as a primary residence,
Sure.
there is two products. One is called Home Ready, one is called Home Possible, that you would be able to put as little as 3% down and buy that and live in half and rent out the other half.
Okay. Okay. So that's a good way to start a nice little investment portfolio is,
Yeah.
again, starting FHA in the first one, moving to the second one after a year or two,
Yep.
and then doing it again, and then
Well,
building it.
and one of the things I just want to mention too, Tammy, that the thing with a year, most people when they buy a duplex, if their first time that they've rented something out, you have to be able to prove that you're receiving rent to count that as income, so it helps offset some of the payment. So the standard rule of thumb is they're going to want to see 12 months of canceled checks or bank deposits, or a 12-month lease with the bank deposits or checks showing that you're actually getting rent from the property.
Well, that makes sense.
Otherwise, you cannot use the rent as income.
Got it. That makes sense. Okay. Okay. Um, just as an example, I want to go back to the work that you and I have done. I have to say you've been really great. I've had many clients with you, and let's talk about Frank. We had a out-of-state buyer that neither you nor I met in person, and actually I didn't meet him until he came to do an inspection on a house that he put a purchase agreement on. So let's talk about our experience with Frank. Frank was pretty great as far as I was concerned. I think you did a great job with him. So tell me how you felt working with somebody you hadn't met and was out of state.
Working with somebody that I've never met or out of state is difficult for me because I'm a face-to-face person. I think it's really important that you get to meet the person and see the person you're working with. I have no problem working with someone in that situation because, like you said with Frank, if I told Frank I needed something, 15 minutes later I had it. The biggest challenge with somebody buying outside of the state is maybe not having the sense of urgency to get the things that we need right away.
Sure.
The loan process can be anywhere from 21 to 60 days. The average loan I do closes in 28 days. It closes in 28 days because I know what we need, I get it up front, and then I let the underwriter tell me what else they need. I become so committed to my clients. If they don't know how to fax and they don't know how to scan, I'll meet them at their bank and pick up the paperwork. That's not feasible if they're in Denver or Los Angeles and I'm in Minneapolis. So it puts a little crimp on my style because I'm very service oriented. But as long as the people know that when I say we need something, the longer they wait to get it to me, the more delay we'll have in closing the loan. And I do like to have all the loans closed in less than 30 days. To me, that's a reasonable amount of time.
Right. What can muck up a loan process? So let's take an example of someone we recently worked with, which we both really liked. She was really great, but there was some things that she was doing, my understanding, during the process, and that was shopping.
Yeah, so some of the things can mess it up big time. Well, let's just the basic thing. Large cash deposits into your accounts are always a big no-no during the loan process. Anytime you put in more than $150, you're going to have to explain where it came from. Their thing there is they want to make sure you're not borrowing money for a down payment. Buying a new car when you're looking for a house is a big no-no. Opening up new credit cards because you want to buy stuff for the house you're trying to buy is a big no-no because it raises your debt ratio. In the instance you and I are talking about, the young lady had co-signed on a credit card for her mother. All she would have had to have done was have mom send me 12 months of checks showing that mom made the payments on that credit card. And I told her that up front. But she saw the interest rate mom was getting. Her credit score, the young lady's, was much better than mom. So she refinanced it, took on the debt, and we almost lost the loan because we added a $383 a month payment.
I didn't know
even
that.
know that. No, I didn't tell you that one.
Oh, I was thinking that I was thought about the $1,000 shopping trip. I'm like, oh my gosh.
No, there was a lot more. But the bottom line is we worked through all that stuff. The biggest thing is that people need to understand if you're buying a house, everything else has to go on hold. I've had people that I think one that I worked with LeAnn, that they went out the morning of closing and bought $35,000 worth of furniture. There is a system that's set up that's called a UDF, an undisclosed, it's basically undisclosed debt. So anytime you go in, if you go to Home Furniture and you buy furniture, right away they're going to report that to the credit bureaus. Yep. In the middle of closing, I received a phone call from my processor saying they just disqualified themselves because they bought all this furniture. And what we had to do is at the closing table, take a break, call home, cancel the contract, have home call the credit bureaus and cancel the contract. It was a total mess. But they said, well, you said I was cleared to close. And I said, yes, but I also told you until they hand you the keys, it's not your house. So
Oh,
never spend money when you're buying a house.
oh,
Wait until a minute after you close, and then you can do whatever you want. But leading up to that, do not take on new debt.
oh, I didn't know that one. That's not,
Yep.
that's not good. That's heart attack. That's heart attack time.
Yep. Well, that's why I have this color hair that I have. Is
Yes.
situations, and they happen all
I
the
have
time.
it as well, just so
Yeah.
you know. So I think we've brought up a lot of these points, but I'm going to bring it up anyway. What is your special ability around mortgages and that has brought you to success? I can tell you, I'm going to testify for you on this one. I think that you're on top of it. I think you stay on top of it, and I think you get it done. You're pretty tenacious. I think you're always accessible, but that's what I'm going to say from this end, but you tell me what you think.
I don't know that I can add anything. I think the biggest thing is that in my industry, it's always good to have 3 plans: plan A, plan B, and plan C. Always have a fallback. Don't put all your eggs in one basket. I've had, like the young person we were just talking about, up until the last minute, I was almost going to switch it from a conventional loan to an FHA loan, but I found a way to work around the issues that she presented us using a conventional loan. If I wasn't on top of guidelines, I wouldn't. Whoops. Did I lose you?
No, we're good.
Well, I can't see you anymore.
We see you.
We're good.
Okay, well, anyway,
It's distracted now. What'd you
I
do?
can't see you. All right, there we go.
There you go.
All right, I totally lost my train of thought. Where was I?
We're talking about that recent sale that we had.
Oh, the bottom line is a good loan officer knows his guidelines, and guidelines change every day. That's the other thing that I like about my company is that when something changes, if the federal government says you can now do this or you can implement this, the date is January 1st, we start underwriting to those guidelines immediately. So we don't wait for the day to come. I have a stack of papers on my desk right here that's 3 inches thick of things that have just happened in the last 24 hours. If you don't know what the programs are, it be very difficult to use them. Sometimes I wonder how my brain holds all this information, but it's good to know what's out there so that you know what people have access to.
Sure.
And like you said, I like to think I'm tenacious. I've closed 99% of the loans because of the fact that I don't give up on anybody. I make a commitment to the people
Right.
I work with that if I tell you we're going to get you into the house, we're going to get you into the house.
Yeah, I agree with you on that. We've worked well with that. Okay, so what for all the years of investing, what's the most valuable tip you would give people?
Before you get into investing, meet with a lender and find out exactly what your specific scenario requires. LeAnn and I were talking about this earlier. There are, and this just came out today, there are certain programs for investment properties that do not require 25% down. But as a general rule of thumb, if you're buying an investment property, you have to put 25% down. That's the number one thing. To get the best interest rates, you want to have a 680 credit score. For you to buy an investment property, you're also going to be required to have a certain amount of reserves, meaning money that you have access to that will allow you not just to make the payment on the investment property, but also on your primary residence. If you own 5 houses plus a primary residence, you're going to have enough money in reserves, and that can be savings, 401ks, retirement, whatever it might be. But all lenders are going to want to see that in the case of something bad happening, you have the ability to make at least 6 months of payments if you did not have a job or any other income coming in.
Sure.
And the reason I say meet with somebody first, find out what these things are. You might be a few hundred or a few $1,000s away, but it's better knowing up front what you have to do and what you have to be prepared for, and also to find out if you might be qualified for one of the lower than 25% down payment products.
Right.
Okay, some of you participants, you must have a question, or the good thing about Keith, he always fills us in with everything. So that's probably why you're not asking, but go ahead and put it in the chat box if you have a question.
We're checking.
We're waiting, but he has really given us the scoop. Now she's coughing. We're quite the team here, aren't we?
Well, good. You infected her. I hope I don't get it through the screen here.
Yeah. We know you already had it.
No, she got it first and
I think
infected
so.
me.
Ah!
So, one more thing, Keith. It's this last question here.
Sue Willett wants my contact info.
Oh, we're going to put that up, Sue.
Okay.
We're going to put up a slide with that.
What do you?
Well,
what-
and just so you all know, and I saw a couple of familiar names out there. I am available 7 days a week, and pretty much 20 hours a day, by text, by phone, by email. Because I have 7 grandkids, texting has become the preferred way of communicating. But if I always tell people, if you can't reach me, you're not trying. So.
And we can vouch for that. And you
Yeah.
know what? That has saved deals for me from the realtor side, having Keith available for the questions and for that pre-approval letter when I need it, like that night, because it's multiple offers and whatever.
Right.
Getting it makes a big difference.
And again, we got it on I think it was a Friday night. You were at a baseball game. You got it to me in an hour. And, I'm writing an offer. And I send it over to my client. We had already been at the house, looked at it. I said, I'm going to send you paperwork to sign. When I call him and I said, I need you to sign the paperwork. Now, this is a 9:30 deadline. And I say, I need you to write a letter. I need you to write a letter to tell people who you are so that we can get ingratiated with this bid. And he said, it's 9 o'clock. Now, this is due at 9:30. He said, why gotta I have dinner? And I said, no, you don't. You don't get to eat. I don't get to eat. You just go get that letter right now. And I got off the phone and I just about screamed. But, it's, you kind of have to have that, be there, get it done, pressure, and you're there. You're good about that. You really are. You get the job done. Like
I think it's important.
I agree. So what do you do so this is my last question here. What do you do to stay on top of the game and direct your thoughts and mindset? That's a good question LeAnn put up there.
You're asking me?
I don't know. Good. LeAnn had that. Okay, maybe she's got some here.
Yeah, I want to know what you do for your mindset and, how do you stay on top of the game, Keith?
I wake up at 5 o'clock in the morning every morning. I'm out of bed by 5 and I start reading guidelines and updates. There's a system that we have that's called All Regs, and All Regs basically updates overnight. And that's what I start reading when the day starts. If I get invited, which I do oftentimes, to seminars talking about new products, new loans, etc., I go to all of those. In this business, especially with this low inventory, knowledge is power. And if you don't know what you're doing, you're not going to be successful. So I try to pride myself on knowing the stuff that other people may look at a memo and say, oh, I'll read it later, and then forget about it. I open everything and look at it right away because I never know when I'm going to have a customer who needs the information that's contained in that memo.
Right. Agreed.
Okay, I'm going to share Keith's information here on the screen.